Welcome back everybody into this Sunday warm-up. So as you can see, as always, we're going to do a review of the setups that I have saved. So in order to kind of warm up after the weekend for the upcoming week, so that you get back used to the muscle memory of the what is the setup should look like, and the price action and everything, yada yada yada. So as you can see here, we're starting with number 122, and we always do this review, this journaling. So as you can see here, for example, in this case, what we are looking at, it's an end of pullback setup, as you can see. So we are seeing a bearish trend. As you can see here, we are seeing another block being created, prices staying below and the key level. So that's also where I took the actual trade. I don't remember when was it. And then we see a huge and strong continuation bearish. When later on we see just a possible pullback on the lower time frame, as you can see with the here. With now the shift in market structure with the break and retest of this previous PSA of the last lower highs of during the bearish trend. That's when we have a shift in bullish lower time frame, but high time frame, that's exactly where we are looking at the strong reaction. It was like around 75% of the retracement, but also very conveniently, I mean, it's not conveniently, but it is actually matching the previous PSA on the left hand side, the lows of the order block, and that's where we have a strong rejection, and that's where we have another leg of the bearish trend. Even though we might not reach the same level, the same lows, we are absolutely seeing, of course, I mean, from here the entry would have been 20, 50, almost, I think it's like 100 pip move. So trying to zoom in. So in this case, that will be a sell. The time, let's see, that will be after the 10 a.m. candle. It's absolutely an end of pullback. So this is of course 25% retracement. The best entry will be at the opposite candle close, bullish, bearish. So that will be counter trend on the lower time frame, but in trend on the high time frame. So that will be the price action, the justification. If we only want to take also the bearish on the lower time frame, we can see that the price is giving us the opportunity. So of course, okay, let's say we are in a bearish bias due to the previous one, but I don't want to take sell in such a strong bullish price action. So what I can wait, and it's something that I also did in this last live week, you can see that we can wait for a break and retest of these previous lows, of this key level, or even better, of these previous lows. So if we are in a bullish trend, of course, what we see is that the price is making new higher high, higher low, higher high, higher low, same, and a new higher high. So what we want to see, it's actually the break of this last, let me write it down, last last higher low, and yeah, we want to see the break below this level and the price is staying below that. So that's why we can have this price action. And now with this candle confirmation here, that's when we can confirm that the bearish trend, and it's not only high time frame, but it's now high chance that the price will continue bearish. Also, we have further opportunity with this very convenient break and retest of this other key level or for our PSA, and that will give you even another scalp. As you can see, very strong volume and momentum. And yeah, we can have this one, this entry or this entry after understanding this shift in market structure on the lower time frame. if you only want to take lower time frame in trend trades. So as you can see here, entry will be at reaction at previous PSA on the high time frame. Possible entries on in trend lower time frame, break and retest of the PSAs. So that will be a win either way. It will be way more than 50 pips, and yeah, that's no coming back from that level, no coming back from this level, no coming back. So it's all at least 1 to 3 risk to reward, and yeah, that's the price action analysis. And let's move on to the next one. So you can see 1, 2, 3. So now what I was looking at, it's quite sketchy, I would say, because as you can see here, we are looking actually looking at the order block. So on the lower time frame, we are still in a consolidation period, but high time frame, of course, this is also due in London. We had a very aggressive spike bearish. I don't know for whatever reason that was, but after a spike in volume and volatility, the price is simply staying into this order block. Even here, the volume was so low that it was crazy. So having the idea to catch a trade already over here is quite unrealistic, I would say. Unless, I mean, you want to take an in trend on the high time frame, that would be the case. I really don't like it because we're coming out of a strong consolidation period. But anyway, yeah, in this case, that would be a sell. It will all be, I mean, it doesn't even matter to write it down because it's doing London, so it's not even a time letter trade. It's just to look at the price action. What I would love to do, okay, let's say okay, so let me just okay, just give me a second. Okay, so as you can see, I had to restart Epic Pen. So as you can see, we were talking about this order block with the price that was ranging in between highs and lows, and we were also having a very low volume over here with the price staying in like 3 pips for I think more than half an hour, and then just spike up, spike down, but still reacting at these previous lows. So I don't think it makes any sense to have an entry over here. And what I wanted to say is that I would love to see a clean break below. Let me make it bigger. A clean break below, a retest of these previous lows, and then take the anticipation of the continuation bearish. I would not like to enter straight away over there. So let's see the actual price action. So we are seeing multiple confirmation of price staying below multiple times, even after making a new low. But still, it will be a very aggressive entry, I would say, and not really ideal. I would love to see if the price action actually gives us a retest opportunity. Maybe quite aggressive, I would say, is since we break below this previous lower low and we retest the PPL. In this case, that could have been an entry, but I don't really like it because it's also as I said, it's a London session. Late London doesn't really, it's not the time that I trade, so it's not the time that I also want to review. So okay, so this is the after this price action is still doing New York, pre-New York, I would say. And as you can see, the price action is not really strong. The volume is not really strong, but we are absolutely indeed going bearish and keep making lower highs and lower lows that you can see highlighted. So and even in this case, what it can be is that we identify this the price action that is against this key level. So you can identify it in this way because we're seeing, of course, the key level. Let me just chart it up in red so that you see it. So we see that each and every candle is closing like here, is closing at this key level, and we are concurrently seeing a very strong bearish pressure, because you can identify that the price is making now strong lower highs that are every time lower. The buyers are not able to push the price up, not to even retest this level to the continuation bull bearish or to this level. So that's very strong bearish pressure, as you can see. Every time the buyers try to make a new high, they're getting absolutely engulfed. And yeah, after that, when we actually see the break below the key level with the break and retest, we have multiple candles closing at the key level. In this case, that will be a possible clean break and retest. So in this case, I would say, of course, it's a sell, still out of New York. So that would be around, yeah, it's a break and retest, entry point, retest of key level. Best entry will be at the opposite, because the best entry will be at the entry of at the candle close of this bullish move. So at this candle close, that will be the best entry. And the price is bearish, so it's very in trend. After identifying a flag against the key level, break and retest after candles are in new lows. Yeah, and in this case, I think it will be a win either way. Let's just let's just see it. So the entry would be at this key level, 1983. It will be 30 pips for sure. It will never come back over here, so that will make further 50. Yeah, it will be more than 50 pips. So yeah, that was the entry. So winning the way 50 plus. So in this case, without touching the trade, that will be an easy and nice win. And also, as you can see here, I don't know if that will be the next one. Yeah, that's also the next one. So this one, the first entry. Then what we see is that we have the retest of this previous PSA. I highlighted this entry because it's the second tap of a now created PSA. This candle entry might be, yes, but it will be quite aggressive in the sense that, okay, we only retested this PPL. It's not a real strong PSA that is in such a low volume time, pre-New York. It's not something that we can say it's been retested multiple times, so that is very likely that it will continue to resist. And even, yeah, we are making a new lower high because price is failing to break above, and we are respecting the trend line and respecting these previous highs on the left hand side. So that's where yeah, that might have been an end of pullback. Still, I don't really like it. It's not really the entry that I would love to take. I would prefer, and probably it's the next one. But let me take this picture as well. Might be the next one. I'd love to look at this candles entry. As you can see, price is retesting a cut and clear PSA. As you can see, it's already been retested multiple times. So even this first trade entries would have been good because that's already been validated as a PSA, not unlike this one that it was not really validated. So let's just quickly see if the next one is about that. Yeah, it's about that. I don't know if it actually went much further. So that would be 1980 entry down to 1976. So that would be a 30 pip scalp, and would be a loss if I took the other one. So that's I'm talking about this entry. So in this case would be a sell. That will be around 13:25. It's 1 hour later. It's actually an end of Bloomberg retest of previous highs, and PPN best entry would be at the opposite candle, bearish, third retest of L, and now previous PSA in anticipation of the continuation of the trend. So okay, I'm back, and as we were talking about this trade opportunity that was at in trend. It was around pre-New York, around half an hour before New York open, and as you can see, it was after having a new PSA being created, we have a further retest and failure to break. And yeah, that will go quite a long way, and that will be absolutely a 1, 2, 3 at least. And let's move on to the next one. Okay, that would have been okay. Let's delete. I think. Oh, okay, yeah, because it was this one. Yeah, it was this one. 126 was the same, but it was actually right before New York open. So we can see that. It's like around 5 minutes before that, and it's an end of pullback. These are not trades I will take very lightly, I would say, in live, but that's a retest of previous lows after making a new yeah, okay. Best entry will be at opposite candle, bearish, yeah, that's basically the same. Yeah, price retesting multiple times previous support, failure to break above, and I think this one will only go yeah, this one will only go around 30 pips, and this one would have been a loss because that will not go why? Okay, will not go far. Okay, so now what we are seeing after New York open in this another trade setup, we are seeing the possible the shift in market structure. So let's have a look at how we can identify this shift, and when and why. So as you can see, of course, we're talking about for the last 4 trades about selling. I mean, this one was another day, but so at least 3 trade setups before the key level, and at each and every break and retest below the previous lows, so that we were in a very strong bearish trend in pre-New York time. So what we can start to see is that, okay, after making a new low, price tries to make a new lower high, which is also matching, probably matching the lower time frame price action, but it fails to do so. And as you can see here, price tries twice to make a new lows, but it fails. So these failures can be some sort of signals that the price is possibly changing the structure, because as you can see, you can identify how, for example, in this time, you add multiple and bigger bearish candles. So they are more in frequency and also in size. Look at this, compared to the bullish one. So you only have very small, sometimes okay, a little bit bigger, but very small and very few bearish candles, bullish candles. So that's also a good confirmation of the continuation bearish. But when you see that there's a shift, you can see it because, for multiple reasons. So for example, you can see that price on the lower time frame is making new higher lows. So you see that the bears are failing to make new highs, to make new lows actually. So what we can now see in this bullish trend, of course now this is late, but look, we can start to see that now in the same amount of time, we're starting to see that there are multiple, many more bullish candles compared to the bearish one. So it's they are bigger in size and bigger in, of course, in quantity compared to just simply the previous time frame. So let's say bearish trend with more consecutive bearish candles bigger than the few bullish ones. So for example, this is what is actually clearly identifying the bearish trend. So now this is the possible shift in market structure when we have more consecutive bullish candles compared to the few bearish ones. And you can start to see, because it's actually something that is very good to see. Okay, how can I sell over here if just simply looking at the last price action, there's a clear shift in the market structure. So for example, also now we can have this analysis and also have an analysis as per market structure just by itself. So we are in a bearish trend. So let me just point it out. So we are in a bearish trend up until we are proven wrong. So now basically simply talking about market structure, we are seeing, let me put that in red, lower high, lower lows. This is lower low, lower high. This is a new lower low. So the price is making new lower lows and no lower highs up until we can clearly see that the price is failing to make new lows. Of course, we have some market structure that is telling us, okay, up until what price point I am going to accept I'm going to still be in a bearish bias, and that will be these previous lows. This is the last lower high. So lower high, lower low, lower high, lower low, lower low. So after making the last lower high, we would expect a lower low, but the lower low can be anywhere. If it can be like here and then continuation here, and that will validate a new lower low, lower high. But until we see this price action, we cannot confirm that there's a shift in market structure, so that the price is now on a bullish bias. What we can see is exactly as I was saying, that okay, it might be weird, look weird to take a sell at these lows. So there's no really trade opportunity yet, because it's quite weird. You see that there are multiple consecutive bullish candles, so it feels weird to enter sell over there, even though I did it multiple times. And when you see that the price action is like this, so with multiples candle breaking above the key level, and yes, we have a nice bearish candle, might also be a 75% retracement, yada yada yada. But when we see that we are now retesting, so let's say successfully, this previous lower high, that's a validation that the price is now into a shifted market structure. So we can see that the price is now making a new higher high, and now we are validating this as a new higher low, and this higher low, it's a first sign. This is the first high risk high reward entry. New higher low being created, and but the safest one is still simply based on market structure. You can see we have this PSA, that's where we took the cells, that's been retested again, and that's where we can have further entry. So that will be the safer entry, will be exactly over here, expecting price to continue bullish, because now we are in a clear market structure. Because entering here might be scary because you still have this price action on the left hand side, but after breaking with New York volume, of course now you can differentiate the pre-New York volume, pre-New York, and now the New York volume, to see that of course with new volume you can expect price to actually break some PSAs more easily compared to before. And that would be for example over here, safer entry, higher low. Okay, so that's what I want to screenshot. And yeah, basically is a market structure. So as you can see here, 37, it's now a buy, and that will be after 820, which is when I want there's a clear volume coming in, and that's what the time that I want to take an entry. Of course, this entry will still be high risk high reward because now we are still below the key level. But looking at the retest of this previous PSA, that's a very nice entry, giving you the opportunity. And you can also have further entries anyway. So for example, we could do in this case like 127A, oopsie, A, which will be a buy, which will be basically that time, break and retest. Retest of previous highs, which I would end. Okay. Best entry will be in trend, bearish. This is just barely bullish, I would say. High risk high reward entry at first sign of market structure shift. Yeah, that in this case that will be a win. That will be a profitable trade. Okay, so in this case it's like this. That will be the best entry, will be opposite, but that will still be now bullish. I don't know if that would be on the high time frame bearish still. I would still say bullish because it's I mean, no, it has to be bearish because it's just about the last 20 minutes that it was a bullish. So safer entry after break and retest of other PSA, which would be the same over here. Okay, so yeah, that's pretty much it for today. I don't know. Yeah, that was the trade. We can see how far it goes. We have multiple retests of multiple PSAs, and yeah, I was looking at this trade entry because now we are seeing a shift in market structure, as you can see after this strong rejection. Just have a quick analysis. You can see how after this strong rejection, price had again a very nice and bearish momentum. You can see that we are starting to, yes, we can expect like, okay, this is the bullish momentum, so I want to wait for like a 50% retracement of this. So maybe you can have some entries over there, and maybe even take a loss, and that's absolutely fine. but then you see, okay, the bearish, unless you know that there's a strong PSA over there or key level, but okay, when do I confirm that there's a clear shift in market structure? For example, the first thing that I see is the break below these previous lows, and we can still identify a bearish flag against this level, and we have a break and then the retest of the PPL. So this could be your high risk high reward entry for the sell. You have further continuation, but this is not an entry that is actually at the PPL. After that, you have this entry would be perfect, this continuation entry would be perfect, and here it would be messy. I would like this would be the perfect entry, and I'm sure that I saw it, but it's just very aggressive. But it's very clear because it's with a strong bearish momentum, and that's with the retest after the New York Stock Exchange opening. That's the retest of the key level. This entry at this candle close will be absolutely perfect, and of course will be 30 pips in like a few seconds. But after that, yeah, 85, 88, yeah, will be 30 pips, and this each and every entry, it's quite weirder, I would say. Yes, we are in a big range, but we are starting now to see some sort of not very cool price action. We're not very huge momentum, but still this is showing you what I was telling you, that yes, we are in a bearish lower time frame trend with the price making consistently lower highs, lower lows. This is lower low, lower highs, like this. But then, okay, you are here. Your price made a new lower low. It's not like you can't expect price to simply respect and come back from there, until you can't start even jump into buys. Until we break above this level, we are still in a bearish trend. Nothing says that the last lower high has to be touched only once. Actually, it happens multiple times, especially on gold and all other currency pairs, that it gets retested. And until you have the price action clearly showing you, as I just told you in the previous example, that we have a break and retest of this level, and then a safer above retest of this level, we don't have a matching, shifting in market structure. It's only with this price action that we could validate it. So even if we see this price action, for example, you see this second reaction here, so you validate a new lower high. I mean, the same lower high is still validated. That's a perfect entry, because then you have price showing you, okay, there's another leg on the bearish side. Buyers fail to make new high, so you could bet and sort of bet on the fact that this might be the next lower high. It's also matching a trend line between these lower highs, and of course in this case it will still be a win. Price is making a new lower low. Still, it's very difficult with this price action to start to shift into buys. That's still difficult, especially with this strong bearish price action on the left hand side. And still, price action is showing you that the same lower high is being respected. And over here, this is after the 10 a.m. candle. Of course, even this is with the 10 a.m. candle, you can enter over there. The price action will still be safe, and that will be another entry. Sorry about that. And yeah, after this is another one, and we're going to talk about it later. So I hope you guys enjoyed this sort of Sunday warm up for the week ahead. And yeah, that's where I saw it. And I see you next time.